How's it going, everybody? It's Stas here. So the markets were a mixed bag today. We had the S&P down 0.1%. The NASDAQ 100 went up 0.5%. We had the Dow down 0.75%. And the Russell 2000 down about 0.9%. So today, we got to break it down. We got to go over the markets, some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, subscribe, take a sip of your coffee. I have another Starbucks here, guys. The funny thing is, they gave me an iced coffee, or actually I ordered an iced coffee this morning, and they gave me a hot coffee. They let me keep the coffee, the hot one, and then they gave me the iced one. So now I'm drinking the hot one later in the day, but I'm actually drinking it cold. So yeah, let's talk about this stuff, guys. Hit the like button, subscribe, drop me a comment, join the Patreon, get your 50 free bucks from M1 Finance. All that stuff is linked down below, and let's get into it. So the markets today via SPY, which tracks the S&P 500, hit an all-time high. We covered this earlier. It hit $472 per share. We ended up closing under $470. You guys can see we closed at about $468.90. So for next week, I want to see a breakout above 470, right? I want to see if we could break out of the wedge yet again and test those highs from earlier in the pre-market, which again were all-time highs, $472. And when it comes to QQQ, let's pull that up. This also hit an all-time high today. So we have tech stocks ripping. We have Triple Q at all-time highs, 405.30 is what we hit earlier, and this one's actually well above the moving averages. It's breaking out of the wedge, unlike SPY, which broke out, and now it's back in the wedge. And then we have the overall S&P 500, right? The 500 largest publicly traded companies. Those as a whole are doing well, but in reality, are they all doing well? Probably not, considering the S&P 500 is really dominated by a couple of names. They make up like 20-30% of the S&P 500, and one would argue that a lot of the S&P 500 companies are zombie companies, if you will. You know, you've heard that term thrown around. So that's a big debate we're not going to get into in this video. But overall, the markets, yeah, they're at all-time highs, guys. QQQ and SPY. And let's take a look. I think the Russell obviously went down today, but it's been going down the past couple of days. Let's take a look at the small cap index, guys. If you all recall, we covered how it was trading within this horizontal channel pretty much all of 2021 up until the end of October, where we broke out. We hit the mid 2400s, which ended up being an all-time high, and it got pretty overbought at that point. No kidding. I mean, look at the RSI. It got to 70. Now we're just pretty much seeing a pullback towards the resistance that pretty much was hitting the Russell all throughout 2021 at about 2350. So we hit an all-time high. We're pulling back. Looks like we're about to test the moving averages on this yearly chart and the old resistance as a new support. So this could end up being a dip buy on the Russell. In fact, you guys in my Patreon know I've been buying IJR recently, which is a small cap ETF. I've owned this since $70 per share, 75, and I've averaged up. And now my average is probably close to $100, maybe 95, 100, something like that. IJR is my main exposure. Really, it's my only exposure to small caps. Well, I do own a couple of stocks that are smaller cap companies, but when we're talking about ETFs, IJR is the only one that I own. And when it comes to the Dow, let's see what the Dow chart looks like. This hit all-time highs about 2 weeks ago, and since then, you guys can see on this yearly chart, it's cooled off a bit. We're heading now towards the moving averages, and it's simply looking like a healthy pullback. So what do you guys think? Drop me a comment down below. What are your thoughts on the markets, stocks? Are you buying? Are you selling? Are you just staying away? Are you playing options? Let me know down below in the comments. Make sure to also hit the like button if you find value in my videos. It really helps me out in the YouTube algorithm. As always, I appreciate all of you guys out there watching. And with that being said, let's talk about some stocks. Starting off with Gamestop and AMC. Well, I was going to say both of these are starting to rip again. AMC's not there yet. It's about to break out, in my opinion. But GameStop It's already breaking out pretty much, right? GameStop today alone went up almost 10%, 8.89% to be exact, and we're seeing a very interesting pattern play out here. If we're looking at the broader trend, right, on this yearly chart, we're trading well within a wedge, right? We're making higher lows and lower highs at the same time. We've been doing this since March of 2021, so about 8 months ago, and we're just squeezing deeper and deeper into the wedge, right? And if I pull up the 4-hour chart, you guys can see we're also seeing a bit of a cup forming here and a breakout above the highs from earlier this month. If you guys recall, earlier this month of November, we almost got above 225, but we didn't. We actually failed there about 4 or 5 times. Then we sold off back down towards the bottom of the wedge at about 195, 200. And now we're actually ripping past 225. That's a very good sign for the bulls. That momentum's kicking up above 225. And we also had a spike in volume today. Pretty nice spike in volume when it comes to GameStop. But it's not quite yet completely breaking out, right? Yes, we had a good day. 9%, solid, volume's kicking up, momentum's gaining, but we got to break 230 in my opinion, because 230 was resistance back in the summer, middle of August, early September as well. So if 230 starts to break, I'm going to put my alert right there for GameStop. This is going to start taking the wedge out, in my opinion, the resistance of the wedge, and we could get round 2 or probably round 3 at this point of just complete madness in the GameStop stock. The whole GameStop fiasco, it's been going on for almost a year at this point. Has it been more than a year? It feels like it's been 5 years, but it's really just been 1 year, not even. You know, back in January of 21 is where GameStop went from $20 to $4.80, which, just looking back on that, makes me just my eyes wide, and I'm like, holy crap, that's insane. And we could be gearing up for the next round here again. If 230 breaks, the wedge breaks, this is going to go ballistic in my opinion. AMC is also trading in a wedge. It's really no different. I mean, look, back in January, or actually no, that wasn't in January. Let me see this chart quickly. We did see a spike in January a little bit, but it really wasn't anything compared to what we saw in May. If you guys remember, AMC in January went from about $3 a share to 20, which was a crazy gain, but it went even crazier in, when was this? May, June. It went from about $8, $9, $10 all the way to 72. And since May, June, it's been trading in this wedge, squeezing deeper and deeper into the wedge on the yearly chart. And you guys can see it on the 4-hour chart as well. And needless to say, I think it's breaking out if it takes out 45. It's teased 45 many times in the past couple of weeks, stemming back from the middle of October. But each time we touched it, we failed pretty much every time. We did get the 46, 47 once. That was about a week ago, 10 days ago. But obviously, we didn't break out. So I'm going to put my alert at $45 for AMC. At that point, maybe we start getting a breakout. It might happen, guys. And the thing is with these meme stocks, and I know some of you guys get mad at me calling them meme stocks, but to me, that's what they are. What do you want me to call them, guys? I don't know. But to me, these catch on fire quick, and you probably know that at this point. You're going to open up your app one morning, you wake up, you open up your Yahoo Finance app, whatever app you use to check the futures and, pre-market, you're going to see next to AMC, it's going to say plus 20%. It's going to happen one day. Most likely, and that's going to be the start of the next wave of breaking out. So watch out for the meme stocks, GameStop and AMC. Foot Locker is also one that I'm looking at here. They reported earnings today. They went down 12%, and this is simply, in my opinion, profit taking within the overall breakout. If you guys recall, we covered Foot Locker before here on the channel recently a couple of times, and we talked about how it was breaking out of the downtrend. You can look here, you can see back in May, it was at $67, got down to 44, it was under the moving averages, we saw a death cross, it was pretty much getting destroyed, and now recently, since they paid their last dividend in the middle of October, the stock started to break out. shortly after that. We got a golden cross. We got a huge move from 47 to $60. And admittedly, that was a pretty big move that got the stock overbought. And it was pretty much pricing in fantastic blowout earnings. And anything that came in a little bit wonky, probably would have dropped the stock, which in this case is what we got, even though the earnings were pretty good, and I would say. But like a lot of these retail locations, Foot Locker is experiencing problems with the supply chain. It's a problem, and the CEO said, I believe it was the CEO, or somebody high up said, supply chain constraints will be a problem into next year, which, yes, that's dropping the stock, even though they did $1.93 EPS, which beat the $1.37 estimate, and they did revenue of $2.19 billion versus $2.12 billion, with comparables up 2.2% year over year, which 2.2%, that probably wasn't as great as expected, considering some other retail locations did much more than that. I would still consider this a pretty decent earnings report, despite the fact of the supply constraints that are hurting this company. So we're already seeing buyers step in around $50, right around the 180 SMA on the 4-hour chart. And if I pull up the intraday chart, you guys can see straight up consolidation all day today. So it's not guaranteed that Foot Locker is going to break out now that we consolidated all day today, but it's worth watching. As the dust settles the next couple of days, maybe we start making a move towards the mid-50s again. Definitely possible. So I'm watching Foot Locker like a hawk these next couple of trading days. And by the way, happy Friday, guys. Hope you guys did have a great day today. Great week overall. It was a pretty good week. I mean, nothing too crazy happened. Me personally, I didn't do much trading this week. I did buy some long-term stocks. I sold a lot of covered calls for extra income, right, while I'm holding some stocks, waiting for them to pan out. And it was a pretty decent week, I would say, right? So let's talk about Goldman Sachs, GS. Let's see what's going on here. And JP Morgan. We'll talk about that one in a second. Goldman Sachs is now down about 50, actually more like $40. My math was wrong there, guys. Over $40, actually. Or right around $40. Down about 10% from the recent all-time highs of 426 that were hit earlier this month, so about 2.5 weeks ago. And what we're noticing on the 4-hour chart is we're holding well within the uptrending channel. I mean, we're still riding it. We're under the moving averages, which is a bit worrisome. But again, we're holding, as of now, the bottom of this channel. And if you guys notice this chart, we have broken under the moving averages many times over the past couple of months, and we've still seen buyers step in, buy the dip, and run the stock back up. So I'm looking to see if that happens again, whether it's 390, 395, 385, 380, this general area. I want to see if we get consolidation, buyers come in, volume kick up, and the stock's oversold, which I think really could, bring buyers into it. So we're going to be watching it. I'm going to put my alert. Let me just put an alert at maybe 390. We'll watch it from now or from there. And the next one here that I'm looking at, like I said, I hinted to it, is JP Morgan. It's also pretty oversold. It's beaten down. It's not down as much as Goldman Sachs percentage-wise. I think Goldman Sachs was down like 10%. JP Morgan's down 7%, 7.5%. But still, it's worth looking at, considering this yearly chart shows that we're getting, we pretty much are at the main 180 moving average, which buyers have stepped in at this level in the middle of July, in the middle of September, also middle of October, and now, I guess it might be a coincidence, but we're in the middle of November. Will history repeat itself? Will buyers step in again in the middle of the month, heading into the latter half of the month, which now November flew by. We're heading into the latter half of the month. I think history might repeat itself here. Granted, if the markets collapse next week, which could happen, anything could happen, these stocks will probably all come lower. But if markets hold up, Dow comes back, banks could do well. I think the Dow or the JP Morgan stock could go to 165, 170 again. It's definitely possible. Coca-Cola, we haven't talked about this. dinosaur company dinosaur company in a while, guys. And full disclosure, I don't own Coca-Cola. This is one of those stocks where the PE is just unreal. For the little amount of growth they have, the PE is disgustingly high, in my opinion, guys. Not to bag on Coca-Cola here, but the PE is a 27. So this is trading right around, I think the S&P PE is like a 27 as well, maybe a little less, maybe a little more. I think Coca-Cola is just way overvalued here for the little amount of growth that they offer. For me to even consider this as a long-term investment, the PE's got to be like a 10. Let's be honest. Maybe even lower than a 10. But I'm not looking at it as a long-term investment right now the way I'm talking about it in this video. Even though I went on a little side tangent there, I'm kind of looking at it as a short-term trade. Coca-Cola is pretty oversold here. It's come down from 57 to the low 55s. So it's not down a lot, but it's still down about 3 to 4%. And notice, we stepped above, or closed above rather, the 180 SMA 4-hour chart, and we're noticing an ascending triangle as well. If you notice here, stemming back from the middle of July, Coca-Cola really hasn't broken out of $57 to $58. I mean, we've tested that level many times, countless amount of times, and now we're pulling back. And again, we're holding a higher low. So in my opinion, there's possibility of Coca-Cola squeezing deeper into this triangle, making a move from 55 back to 57. And who the heck knows? If the markets get more frothy, Coca-Cola might break 57. The ascending triangle might pan out, and that P will get even higher. The PE might go to 30, and then it would be even more overbought or overvalued. But again, I don't care about the PE because I'm not buying it on a long-term basis. I'm just looking at it as a trade, which for trading guys, looking at charts, fundamentals, for the most part, really don't matter. Or else we wouldn't be trading GameStop. We wouldn't be trading AMC because those stocks are ridiculously overvalued because, again, people aren't trading them on fundamentals. They are trading them on technicals, momentum, hype, all of that good stuff. So one more stock before I do wrap this video up, guys. It's Disney, another stock here that has been clobbered lately from $200. Now it just hit a 52-week low, I believe. Maybe not 52-week. No, it's not 52-week, but it's at a roughly... Actually, no, it is 52-week. Pretty much. I mean, a year ago on the 23rd of November 2020, Disney was at $140. Now we're almost at 23rd of November again. We're at 154. So we're pretty much at a year low when it comes to Disney. And the stock is down from 200 to 150, which means it is down over 20%. It's in a bear market. And on the 3-year chart, I really like this level coming up. I believe 140 will be the bottom. I've been wrong in the past. Everybody's wrong sometimes, right, guys? But I have a feeling, at least in the short term, we're going to see buyers step in around $140, 180 SMA, 3-year chart, which has been support for a good amount of time here. And I think we're going to see a rally on Disney because it's one of those stocks that it's obviously not going anywhere, and it really hasn't seen any love in months, literally months, guys. It's seen little mini rallies, but nothing significant. So after a whole year of just being thrown in the dumpster, I think Disney's going to slowly reverse in these next couple of months. Again, I could be wrong. I might be wrong. But I'm going to be watching it regardless. And full disclosure, I own Disney. My average is like 140 or something like that. So yeah, I'm long. Either way, whatever happens, I'm in the stock, right? So that's pretty much it, guys. I hope you all enjoyed it. It's getting dark where I am right here. I'm not sure if you guys can tell. I'm not in my original office. I'm away from my house right now. So I'm gonna wrap the video up. If you guys enjoyed it, hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out the Patreon. If you guys want to try it out, it's linked down below. You get all my moves, buy, sells, call outs, morning upcoming videos, more access to me, all that good stuff. It's down below, or you guys can go to stocksurfest.com/Patreon. Make sure to also get your $50 from M1 Finance. All you have to do is use my link, deposit $100. We each get $50 to invest with. Same thing with Webull, deposit $100. We each get 2 stocks up to $1,600, and all of those are linked down below. And make sure to check my video out from earlier. I'll pop it up here. I'll see you guys there. Thanks for watching. Again, as always, keep crushing the markets. Stay safe out there. Peace out.